And good day. This is the Eye of the Storm podcast, the big picture technical outlook for the S&P 500 and the NASDAQ 100 via the futures market, so that's the ES and the NQ, for Sunday, June 4th, 2023. Well, Friday's end was climatic in nature. The rally itself was extremely strong and persistent, as again, we saw large amounts of capital being returned or reinvested or reallocated, whatever was going on. Friday was in the broader market. In a lot of the non-tech sectors, we saw money begin to come back in, on the basis of likely that it stood on the sidelines waiting for the outcome of this debt ceiling discussion, whether the country was going to default on its debt and its obligations, or whether they were going to come to terms and move forward. So I think partially it was a relief that that's happened, but now all of that money that was sitting on the sidelines, so to speak, came rushing back in and was allocated back into the market for what is now being perceived as a continuing bull market. Now, I am going to start here on the daily chart. And what I've done is I've opened it up so that on a daily chart, I can now go over my Elliott Wave count for the correction that remains in process. So I want to just go over some basic Elliott here, and then we're going to discuss how this all is forming and how I'm counting it, and then giving the reasons as to why I am not changing my count to like, oh my God, this is bullish, but how the current count and the wave pattern that we are now engaged in both the S&P and in the NASDAQ fit to a T to what's going on in the markets. So beginning at the all-time highs, let's start to count down. Well, we finished up in January of 2022, and that would have been at that high here at 40, I believe it was going to be, well, here it says 48.78, which primarily is going to be, and actually 48.91, but that's going to be basis the June 2023 contract. So what happens is it all gets readjusted each time we do a roll, because we know that that high was a 48. If I take it out and go up onto a weekly chart, we're going to see that that high is much different. That high is 48.0825. That remains the all-time high. We have a slight difference when I look at it on our daily chart, and that's because of the June contract. So, but off of that high, which I'm going to continue to put at 48.08, but we can use this January contract, which basically is 49.08. So it's kind of interesting, but there it sits. Now, what we initially are looking for, so let me just, one step back. What that completed was an intermediate fifth wave, a primary fifth wave, a cycle fifth wave, and a super cycle third wave. Now that super cycle wave 3 began, and we had to go over to the SPX because the S&P future did not exist in 1932. But that's when this move began, and we can track it via the cash market, the SPX, which did exist. And so it basically started at the 1932 low, which, by the way, was $4.46. That was the low in 1932 where all of this took place. A super cycle, bull market, third wave advance that included a world war, the Vietnam War, the Korean War, the Afghan War, the Desert Storm, version 1 and version 2, several recessions, a depression, et cetera, et cetera. All of that was within a bull market move. Now, where does that put us? On the largest scale, it's within the S&P. It is a supercycle degree fourth wave. What's going to be inside that supercycle degree fourth wave? Well, we just work our way lower. Within the cycle degree, it's going to be a cycle A, B, C. Okay, so now we're in that cycle A wave. What's going to be inside of that? We come down to the primary degree. It's going to be a primary A, B, C. I'm going to stop right there because I'm going to go one level lower so that we can see the progression. What's going to be in that primary wave A? We're down to the intermediate. It's going to be 3 waves of intermediate degree labeled A, B, C. Now, let's come back and start in that intermediate degree A wave. What's going to be inside of that? Possibly, here's our choices, an ABC of my minor degree or a 1, 2, 3, 4, 5 of minor degree. We're going to start to count this out now. We initially, as always, I'm looking for the development and the creation of 5 waves down, initially right off that high. I got that, I labeled it minor 1. Then it already, this correction started way back in 2022, started to throw us curveballs as to what this structure actually was going to be. So we get an A, an irregular B, and then a C wave up. And that formed minor wave 2, in essence, an irregular. And what I can do is I can start flipping this over, taking a look at the line chart, and you can see we get the irregular, and then we get a 5 waves up. You're going to say that that looks like 5 down, but it actually is an ABC. So we can see it here. We get the ABC, ABC, 1, 2, 1, 2, 3, 4, 5 as a C wave. So again, minor wave 2, then we get an additional 5 waves down, minor wave 3, another 3 waves up, minor wave 4, and a clean 5 down. And that would just take us to the June of 2022 low as minor wave 5, intermediate wave A. So we did get an initial 5 waves down, which gives us 1 level up in the intermediate degree that we've begun the correction. The impulse waves are down, pointing down. The 3 waves rallies are higher. So that puts us into that longer-term corrective mode. So now we're down here. Now we come up with an intermediate B wave. What should it consist of? An ABC of minor degree. There's A, there's B, here's C, there's intermediate wave B. Then we do a glorious 5 waves down, fast, perfect, well-formed, down to the October lows. That was a minor degree 5 wave decline, to complete intermediate wave C, and then 1 level up, intermediate wave A, right? What was going to, primary wave A. What was going to be inside that primary A wave? 3 waves of intermediate degree labeled ABC, ABC. Remember, I've stated before, once we're in that correction, all subsequent lower degrees will operate in the same pattern, ABC. Now, what it does not specify is that wave A can, so that ABC can be a zigzag or it can be a flat, or a combination thereof, as we're realizing. So it doesn't make it any easier, but we just have to understand corrective patterns versus impulse patterns. There's only one impulse pattern. There's 5 waves. It's either up direction or it's the down direction, the direction of the trend. In this case, the trend is down. So our impulse waves are going to be down. Corrective waves are going to be counter trend. And the trend right now is down, so they're going to be up. Okay, so now we've counted down, we have finished primary wave A. Therefore, off of that October low, we began a primary B wave counter trend advance. So already we're looking for what's going to be inside that. 3 waves to be labeled ABC of intermediate degree. Now, we still are not really going to be clear on, well, how should this all work itself out? Is it going to be an ABC for wave A? Or is it going to be a zigzag for wave A? As it turned out, it's a coin toss to be put inside what really it was. But at best guess, it was a 3-wave A, a 3-wave B, and a 5-wave C to produce intermediate wave A of primary B. So our initial outlook right now is going to be that we're likely going to pull into a flat. But as I have been discussing as well, some of the nuances of Elliott that have changed because of the style of change, the volatility and change, just all of the things that have evolved within our markets, which actually are kind of changing Elliott wave structures in terms of what we would normally expect or associate with it, has kind of expanded or evolved to include other things. It's not necessarily breaking any of the rules. It's not necessarily changing higher or lower expectations for the move, but it's changing how the structures actually play out. So again, now we're in this primary B wave, and we've now completed intermediate wave A. We're looking for an intermediate B wave, which will unfold in an ABC. In this case, it did turn into a zigzag, but it completed at the mid-March low here in the S&P. And we counted it out, put an intermediate B, and that put us in intermediate wave C of primary wave B. Now, we can start to build our Fibonacci's, and we did way before, right? Once we got to this high, we immediately could put in our expectations for a larger move down. And so we put fibs all the way on. Now, we can start loading, which we have a primary A wave low. We now can put our fibs in, which we did quite a while ago, to take a look at what can we expect from a primary B wave. Well, we go back up here to that high. Let's see if I can capture it right. Not there. All right, I got to catch this one. It's right. Hold on. Let me get into there. So I've got to get it right. This is the one. That's the one. Thank you. I'm going to add a drawing. It's going to be this. Okay, so and we're going to take it down to that low. Okay, so here are our resistance levels for coming up. What are the most common for a B wave? Well, they're going to be 382, 50%, and 618. So here we go. 382, this thing held around 382 for the longest time. 4,100, we went up, we came back, we went up, we traded around, played really within 4,100 all the way up through most of this intermediate C wave. The explosion really began within the minor fifth wave of intermediate wave C of primary B. That's where we got most of this explosion higher. So with that in mind, we went through the 50%, which was right at 42.50, and we just recently cruised above that level. In fact, Friday, we cruised above that level. We held below, which was also the high of wave A. We were looking to get above. We broke kind of above, came back below, kind of above, and finally on Friday, we zipped and we moved pretty dang quick in a rally that took us above there. Could this be completing all of intermediate wave C and again primary wave B? It could, but now we're going to continue to build our case because, okay, so now we have our count. We know we're in A, B, we're in the intermediate C wave. Let's bring it down. And we've got our levels for primary B. I'm telling you, this is how I build my picture. So that's why I want to go over this step by step so we get an understanding, because let me just go back to that daily chart. I'm sorry. So when I go back here, what a lot of people say, no, we need to see 5 waves down, all the way down. So that if you're looking for 5 waves down to form primary wave A, consider what you're looking for, the intensity, the size of what you're looking for. Because at best, what we'd have to consider is this first 5 down is intermediate wave 1 of primary wave A. This would be intermediate wave 2 of primary wave A. And this would be minor wave 1 of intermediate wave 3 of primary wave A. Consider what the implications are suggesting there. Now, if you're sincerely looking for the world to come to an end and the markets to collapse, sincerely collapse, consider how far down they're going to have to go to fulfill a third wave. And what, we thought this was pretty good, or even this was pretty good. If this is just minor wave 1 of intermediate wave 3, the longest and the strongest within an impulse move, which this would be, what are we looking for? 1.618 maybe? And so this would be finishing minor wave 2 of intermediate wave 3. So you can begin to see that it's like it could possibly be there, and you keep it out as an alternate, but using it as a preferred count, think of the implications. What does that suggest? What are we moving into? And when you don't get that, how do you need to make your adjustments? So again, this could have started out intermediate 1, intermediate 2, boom. But then we got this. And all of the chatter. Now the chatter and all of the everybody out there declaring something fits in a B wave. Not necessarily a wave 2, but in a B wave, and a larger B wave at that, absolutely almost to the T. Dot the I's, cross the T's, and that's what we're doing now. So that's how I came to the conclusion that this was the primary A. I went over what the expectations would be and then how the market was reacting that too. And it would have stayed alive pretty much up to here. But when it gets to here and starts breaking even higher, yes, the possibilities exist. The fibs allow for it and still can be considered a wave 2. But what it cannot do, it cannot break the August highs. So I get people saying that the market can't break the August highs. Well, here's one reason. If this is your wave count, this is why it couldn't. Because then it's no longer correcting a wave 1, right? If it breaks above there, it's not a wave 2 correction. It's going to be something else. If that high at 44.33 gets broken, then we're into something different. And do we have fibs that could take us higher? We absolutely do. So if that's not going to fit into a minor wave 2, what does it then say? We're still in a primary B wave. And that primary B wave can, because this is an ABC, we have to leave in the potential for an irregular B, which suggests we go above that high. Again, I'm going to go back to 48.08, but if we're going to still be in this June contract, we may have to look at above 49.08, basis the current contract, which is why I usually try to balance that out with where does that put us in the SPX, which is the cash market. That high in the cash market is 48.18. So within that realm, here's what we can do. Following the futures market, that's what I'm updating, and this is the technical picture for the futures market. If we are still within primary wave B, what have we completed? Intermediates A and B, we're in intermediate wave C. What's going to be inside of intermediate wave C? 5 waves of minor degree. And here we go. Wave 1, ugly, Not very pretty, but diagonal. So in essence, what's really kind of happening here is started in a diagonal and is finishing in a diagonal. It's pretty interesting, and it's very, very interesting to see. But I think it's just a product of where we are and how the markets react and the volatility within the markets, and a lot of combination of things that are different than previous primary B waves or just cycle degree level moves. Things have changed in the trading world, in volatility, and all the numerous products that we now have to trade. We have 0 DTE options. We have a ton of new volatility gauges, and they're all tradable. Options, futures, etc. This all has an effect on the daily moves within our markets. And that is what's changing. So we have to adhere to account and allow for extensions, a little nuances being left to the side. Not necessarily the basic rules for Elliott. Those remain pretty firm. Like wave 2 cannot overshoot the price territory of wave 1, because then it's not correcting wave 1. But then again, we've seen where wave 2 could take out the low and then scoot up and finish. So we still get that irregular, but not to the upside. We got it to the downside. The trend is down. So we got it to the downside. We're not getting it to the upside. So when we're looking here, we're extending higher, but we've not broken any of the rules that Elliott gave us to guide the count, so that we're being correct about what we need to allow for and what the market is actually doing. Now, add into this has not been easy. This market, while the NASDAQ rallied, the S&P got stuck and refused to move. And as I say, and I'll say again, it took until Friday, right? The Senate passes it, the done deal. No more threat that the country's going to default on its obligations. Whoo, relief pushed back in. And it's not that we saw this mad dash for the tech stocks, which had already done it. It was the balance of our markets, the other sectors that the money returned to, that obviously was sitting waiting. We may see that continue tomorrow and Tuesday as we start the new week. Why? Well, because there's probably a lot of 401k money that's being reallocated back out and into the markets. Maybe it was allocated and put in a money market fund. Now they're going to take it out, and they've done it over the weekend or whatever, and now they're reallocating it back into the equity market. Whether it's right or wrong, it's not my call. Whether that's what's going to happen, well, we can look at that and see the possibilities. Now, intermediate wave A, intermediate wave B, that's what's right there. And we'll just go see it's right there. And now we come back up. We're in a minor degree impulse higher. We have 1, 2, 3, and 4. Within that, this was diagonal. This is forming a diagonal. And and I remember I had left last week that this could be 3 and then this could be 4, and I left parentheses around them, and then we got this. Well, I can't leave that as the 4, and this is the 5. I suppose I basically could, but remember what I had been looking for, and that would kind of put a very strange 4 and a very small 3. This completes it clean. That thrust up and out. Not unusual, could be the 5th, but I'm actually going to label it minor 3. When I come down to my hourly chart, it truly makes a lot more sense, because this comes into 3, 4 within this third. And then, because remember, 3 should be an ABC. This was kind of sloppy. This is clean. 1, 2, 3, 4, 5. 5 is super extended. So it does fit. And actually, it did get to 42.96. And that was a level that just fit to a T on, but more so on our interior move. And just putting fibs together, that was a fib at 100%. But now I need to go back out to my daily chart. And now we got to start marking in where we think, if indeed we're going to go into a third wave, excuse me, a fourth wave, small fourth wave correction. Let me go back down to the hourly chart. Let me put that in. What can we expect? Okay, so if we're looking for a wave 4, all right, so we're going to go back down to here and put it up to there. Again, we're looking at the technical picture, pure technical. Our minimum that we'd be looking for is 42.27 for the market to drive to 42.27, a 70-point drop in the NASDAQ. And in the S&P, most people think it's all over, it's done. But what it does, it puts us inside this small little AB wave, part of the ABC up for the minute 3, or brings us into this little correction that we got, or even this little correction that we got. So we can really drop and fall into pretty much both of these areas, and then go run up and do another run. Now, as far as putting in fibs within this last fifth wave, minor fifth wave, we don't have that finishing one, because I got wave 1, but then I need to attach it to wave 4. And it's not ready yet. It's not done yet. So I got to leave that open. But what I can do is go out one, go back to my 4-hour chart, and we can put in, see, these are for the decline, for our wave 4. But now I'm going to take those out so we're not getting confused. And what we can start building is what the possibilities for the finishing move of minor 5. Minor 5 is still in action. Let's take a look at where it can get to. We got, oops, I got to move this out. Excuse me. Got to put, oops, their extensions. And because we always do wave 1 compares to wave 5. Okay, so what we really have, and this is the one that I found, this is the one that came in on Friday. Minor wave 1, a minor wave 5 would be equal to minor wave 1 equality as at 42.95.25, and it got to 42.96 to a T. So could this be 5 and we're going to start to turn and go down? Yes. But if not, and we still had, this was only 3, we're looking for, and a 5, what is that next relationship up? Let me just I want to take out some of this. I'm going to put this in correctly. We don't need 2, 3, 6, don't need that, we'll keep that. We don't need that, we'll keep that, get rid of that, get rid of that, keep that, get rid of that, put in 2.618 and 3.6. Now these are big numbers, but we cannot discount them yet. Remember, this has been a crazy little completion rally here. Okay, so now you see it clears up. So really what we have now coming back up, if we don't go down and we continue to plow higher on Monday and we exceed 42.96, which was that high, and we start heading above 4,300, we can put a few in there which are possibilities. For example, I can add some, and we're going to go on the basis that this was our 4th wave. And that's not going to come out right. Excuse me. Let me go back and fix that real quickly for us. This has got to be moved down to here, which is 4174. Right. So edit properties. Endpoint is 4174. and say, okay, okay, boom. So now we're in the right place. Where was this going to come in? We do have some at 4203, and then where this fifth wave would be equal to this, or minute, would be equal to 1, is at 4338. So I've taken out some additional. So what do we have? We have that 100% right here where we are. If this holds and we start to decline and we start breaking down, which really kind of has to happen pretty quickly, if indeed this whole move is complete, I would be looking for them to come in and start taking it down pretty quick. Not waffle around, go test the highs, waffle around, test a little bit higher to finish, because then you're starting to push towards the next level. Technically, if it's going to go down, if we're done, it should start to go down, and they should gang up on it, so to speak, right? Because there's been a lot of talk about we're up here, a lot of people feeling this is the ozone. Now, I'm not entering any of the fundamentals here. There's a whole bunch of stuff still out there. Separate update, I'm afraid. So technically, if we're done, we need to start breaking these first levels pretty quickly, start getting back below 4242 or 4240, and start breaking down below wave 1, which is at that 4227 area. And then break down below 4100, basically. But more important would be 4114, 4112. These are levels that remain strong in our market right now. And so they're key levels that a lot of traders are going to be looking for, either to support it or as a break point for popping in. And now we're going to start going lower. So those we'd have to watch very carefully, and we would be expecting it to have just completed a triangle, which tells us that, yeah, should be done, and we just come flying out. Now, if I changed my triangle and connected here 1 to 3, then we zipped up and out of it, which is not unusual, right? A thrust higher to complete it, and then a thrust back below once it's done. We did not see that because this all happened at the end of the day on Friday. So if we come in on either this afternoon or this evening when Globex opens, that would be a good start. They're done, we're done. But I don't see that coming in because there's this relief. And all of this activity that we saw on Friday with the Dow up 700, with the SPX up substantially, with the NASDAQ lagging. So we could still see rotation. We could still, because now they're convinced this is it. We've completed all the hurdles. Again, sticking to the technical picture. So we still need, if we still have more to come, I would expect at least a pullback to 4275 to 4250, hopefully all the way down to like 4240. Back to that area. 4243, that would be perfect. We get back down there. It's a nice decline. It's 50 points. We can put a 4. We can arrange. We can get our numbers in there and see where does this thing now want to go. Now, basis this internal, if wave 5 is not done, right? That's putting the 3 down here and the 4 here. If wave 5 is not done, we get a little pullback and we have one more to go. We definitely are looking for a breakup of 4,300, and then we have 4,338. I had a lot of resistance, and it's still there, 4,303, 4,300 to 4,303. That's going to remain simply because it is the number, 4,300. And now we do have not necessarily a fib level that we equate to the move, but it's still a fib level at 4,303. And then if it breaks, our next is 4,338. And it can do that very quickly because you can see I got nothing in between. So that all still remains. And if I'm putting the 3 over here, then I'm looking for that 4 and we still get that 5. And then we might even have higher levels. Now, what do we have above all of this? Well, we have now, again, on the outside here, This is the intermediate C. I believe, let me just run this out to my daily again. I got to go one more. Let me run this out to my weekly. Yeah, it is the retracements actually for primary wave B. Okay, so those all the way on the outside are primary wave B. I'll bring this back down to at least the 4-hour chart. And what are we looking at? We're looking at a primary B wave. And that comes in, we got to do this, 618. That retracement level is 4,400. So it's 4414 is this actual fib. No, it's actually, what is it? 4,400, excuse me. Yeah, pretty much. And then right above it, we have 4,401, which is a 1.382, which doesn't really count. So I would take that out, and it would be 1.618 would be where minor wave 5 is equivalent to 1.618 times the length of minor 1, and that comes in at 4,439. So these remain valid. Now, moving up, where would wave B? Now, remember, in the S&PX, the old SPX, this was considered by traders of the old SPX as the sweet spot. Markets often went there, and that's where they reversed from. So it's applicable to the SPX and the ES kind of by default, but there it sits at 45.15. And we also have where minute 5 comes into play, not necessarily a Fibonacci combination number, like the multiples as you're moving up, but still Fibonacci. Now, continuing to move up, we have equality of between primary A and primary B up at the highs. In this case, 49.08. If we compare it to the cash, 48.08 to 18. We still cannot rule out the fact that primary wave B, let me just get this in the right position for us. Primary wave B could be an irregular, which suggests that we're going to go above the all-time January 2022 highs and likely then start reaching 1.382, which is way up here, to 1.618, which is even higher. Those remain in the technical picture, but I am by no means saying that's what the market's going to do. We've got a lot of people out there that say, oh, yeah, that's bullish, and I'm bullish, and that's where it's going. That's fine. You can think whatever you like. But my count still leaves that as an open possibility. Does not necessarily fit because this is not a true flat. A and B are not equal in length. With the C wave pushing us above there, they're basically not even close to being flat. But it still can be an ABC, and with the differences that we have in our markets, it could go. But in its current position within intermediate wave C, we'd have to start making these come up here. You know, we'd have to change a lot to extend this and extend this and extend this. But it might be the ticket. So again, I think we're going to start running into more serious trouble when we start, if we start breaking towards 4,400 versus just breaking above 4,300. Well, we've already seen the absolute resistance for the market to break above 4,250 and basically break above 4,230 to 4,250. And it took a massive push of a lot of money being pushed back into the market for it to do it on Friday. Was that all? Was that it? Are they done? I don't know. If they are, do we start to go down? I don't know. These are the possibilities. So we need to pay very close attention. Now, the volatility in my mind has been sold and sold and sold, basically because the market overall has rallied very intensely. So volatility keeps getting sold. Now, mind you, because of all the new volatility instruments and everything else that goes on, this is technical, right? That when we're selling volatility, those guys have cash now, right? They're selling a cash product. So now they got money. What are they doing? They're putting the money back in the market. Maybe they're buying calls. Maybe they're buying into, buying the futures or whatever they're doing. That's kind of what's happening, and it's being reflected in what we see, causing more selling of the volatility because the volatility would continue to drop. But volatility in the speeds of the moves remains. So again, we got to leave open. We have to leave open the potential that this market is just going to continue to go, getting itself up to these next levels. So we have 43.38, 43.77, and 4,400. Those would be up next, and it starts to thin out in terms of resistance simply because of the size of the move and the degrees that we're moving up into. So again, this is the larger primary B wave, a retracement against primary wave A, where primary wave B would be just 618 of primary wave A. That's what it takes us to, 4,400. So, big move. This puts us to where this would be the C wave. And no, excuse me, this is actually minor 5. So minor 5, I got to pull this open just a tad more. That's minor 5 against minor 1. And that comes in right there at that 42.95 area, 42.96. So outside of that, we have a 50% level, which we have exceeded. That, again, is the primary C wave. We've gotten beyond that. We needed to, the primary B wave, because we needed the intermediate C wave to get itself above there. It has now successfully done that, very successfully. So we know that that's been fulfilled. So anywhere up here, we can start to complete the intermediate C and in turn the primary B. So, but I adhere to that because I don't see this new bull market. I will go back and review characteristics of B waves and everything that goes along with it. But I'm going to try to save it because I don't want this to get too long, and it already is. So that's the S&P. That's the ES. I think we still have upside potential. If we're going to get a reversal from here, it needs to start and it needs to just go. That's going to be our sign that top is in. So, but if we just kind of drop and then we start to hold around 42.40, nice drop. It's $40, 40 S&P dollars. That's not a small move. But in the scheme of things, it could just be another little wave 4, and then we got another one that's going to take us to 4,400, or at least 43.40 into those areas. Over in the NASDAQ continues to be, as far as I can tell, just screaming. Now, I'm also going to go out to my daily here, and let's take a look at here. Same deal. I'm coming down and 5. This was an irregular B, pretty much, all right? And then we get a 5-wave C, intermediate wave A, 3 waves, intermediate wave B, 5 waves glorious into the October low, intermediate wave C, primary wave A. So off of the October low here in the NASDAQ as well, we have been involved in an primary B wave counter trend rally. And that then suggests that we're going to go up in what's inside that primary B are 3 waves to be labeled ABC of intermediate degree. What's inside intermediate wave A? 3 waves of minor degree labeled ABC. What's inside the B wave? 3 waves of minor degree labeled ABC. What's in the intermediate C wave? 5 waves of minor degree labeled 1, 2, 3, 4, 5. And now that's on my daily chart. So the first thing I want to put in are retracements for a primary D wave. We're going to put it there. So you can see that June high there is 17 something. So here we have it. We surpassed the 50%. We bumped up, almost bumped up into the 618, where primary wave B would be equal to 0.618 of the primary A wave. And that number is 14,006. Got to move this up a little bit. 54. 14,654 is 618. What was Friday's high? Friday's high was 14,627, almost 628. So we got very, very close. Could that have completed this whole move? It really can. But if I'm going to drop it down now and start counting these internals, here it is. Minor 1, minor 2, we're inside this minor third wave, which just continued to subdivide. Now, could it be 1, 2, 3, 4, 5 when we got the 5 there and the minor 3 here? Yes, but then this would have to be minor 4. And I'm like, no, I don't think so. So what can happen is that this could still be the 5 and this still could be minor 3, but we come flying back down, put in a new low below that 14,200, right? Maybe a little bit lower. And this is just an irregular 4, right? An irregular B and a 4, and we come back, put a new low in, and then that turns into the minor 4, and we still have a minor 5th up to do. That's a strong possibility. Otherwise, I'm completing, excuse me, the minor 3 here at this high as this 5th wave extended. And primarily because, let me come down to that hourly, even though it's a decent decline. We have that high at 14,570 and this low at 14,250. So that's like, yeah, okay, that's pretty good. That's 300 and some odd points. Could that not be wave 4? In the scheme of things, if it was a minute, I'd say yes. Or lower. But as a minor, no. We're looking for the minor to at least get down into here. Now, if I'm really taking a look at this to see how this is going to count out, and I think it's going to count out as 5. 1, 2, 3, 4, 5. Now, excuse me. Next move is truly up to the NASDAQ. So again, let me just move this out a little bit so we can start filling in these gaps as to, well, what can we expect? First thing is, we're looking for where our completion points for minute 5 can be. If this really does mark it. Then I have to look at that being minor 4. And boy, if I had to put a minor 4 here, where's minor 5 going to finish? All right, so let's start doing that. So we got to build our case for what we could possibly be walking ourselves into here. Now, minute 5. Oop, wrong one. Minute 5 of minor wave 3. Okay, so that really, we surpassed that to 1.618. It's right there, right where we went to on Friday. Let me come down. Let's go to that hourly chart and let's open this up. We have it at 654. We got up to 626, 627, 14,627. We have 618 and then 1.618. Let's go back out. Let me just open this up so we can see where these are connecting. 618 is going to be I believe, the primary. Let me go out to my weekly. Yeah, 618 is the primary B wave. And that's going to be where the B wave is 0.618 of wave A. Let's take that back down to the 4-hour chart. What's that level? 14,652. So again, we're in a very difficult spot in terms of what this count is and what we still have left to do, possibly. So we were getting two fib levels right there at 14,650 that are telling us this could be completing the primary B, or right, the minute fifth of 3. So I got two that, one that tells me that it only completes the wave 3. And that was this one. So that's just 1.618. Well, okay. It went to the extreme. We pull back from here and we still have another run up. Okay, so what do I got to do? All right, so I'm going to take this out because now, these are extensions. Because now I need to look at where, if this is going to be 3, a 5 and a 3, and we're going to pull back, we should still pull back into here. So we're looking for a decent drop, a very decent drop, at least get us below 14,200. I need to get something going in here where it's going to make sense. May not happen, so we'll see. And again, we may have to put the 5 here and the 4 there, right? 5, minor 3, minor 4, or A of minor 4, B of minor 4, C of minor 4, and we still get a 5th, maybe back up to that same area. So again, these are our choices. And now we just have to actually be able to play it. Okay, so let's take a look at what minor wave 5 could look like, right? I got nothing to attach it to. If I have to attach it here, it's pretty close. I'm going to leave it right there. What you're looking at is 15,000. So again, if we swing back down and come into here, I can put the 5 and the 3 there. We swing back down. We don't get much lower. We're still opening this up. See, and then we're back into like a 300-point move versus here, 5 to 2 was only 300. Up to here, it's going to be a little bit larger. That's all I need. I need it just to be larger than what we already had. But if that's all I got, then we're looking at here. Equality is 14,909. 1618 is 15,064. Wait a minute. Hold on. Now, let me bring that down. I was wrong on those numbers, what they meant. Yeah, 50% is 14,919. 618 is 15,000. Equality, minor wave 1 to minor wave 5, is 15,563. What could drive it there? Oh, come on. We're witnessing it. We saw this humongous rallies happen. If they decide, yep, we're going to come back and we're going to go right back into NVIDIA, we're going to go right back into Microsoft, we're going to go right back into all of these stocks that they decided to pummel a little bit. And then maybe even Apple decides, boom, we're going to 185, we're going to 187, we're going to 190, we're going to 200. Only takes 3 or 4. We saw it propel it before. They could do it again. I'm not saying that's what's going to happen, but we've got to lay what could possibly be the path and what could take us there. All kinds of things. And what we're completing, remember, is a primary B wave. I'll go over all of the characteristics of that in the next update called the fundamental update. I'm going to end this right here. So we have upside. I think we're still dealing in a very small level. All right, we're still dealing right in here within this possibility of minute and minor. I got to probably move these over. If they're going to come here, we've got our numbers. We're looking for that pullback, hopefully down into here. Give us a shot, at least getting down to here. And that's pretty decent decline in the NASDAQ, actually. 300 points, 300 points. Need to get that done, and then we can rally again, and then we're likely going to be heading towards these upper levels. And then call it a day. Now, if we had to step out, and going back to my larger daily with more time frame, what are we looking at? If we get above those highs, where can we get to? 1.236, irregular. If this is an irregular B wave, 18,058. Oh, total 19,000. Technically, yes. Realistically, no clue. What could possibly push it up there? Mania. But they would definitely be screaming, new bull market, we're going to the moon. And then something happens and it just blows it right out of the water. That would be my take. But I can't say no. I am not looking for it right now. I am looking for something different because I'm trading on a very short-term basis. This is where I'm going to leave it for right now. We'll see how things open later this afternoon, evening in Globex. And the next update will be on Monday, June 5th.